And I'm so happy to see everyone popping up here and there. I want to say thank you to Robert, Aluku, Chibuke, Emmanuel, Lajide, Pips and Candle, Rose A, and Titilayo for being part of this, while the others are trying to join at the same time as well. So therefore, to get started, first of all, let's look at the market. Let's look at thought process. I think thought process is very important. How do we think in this market so that we don't get congested in the way that we view the moving price? Because the one key thing is this: a lot of challenges that traders faced is because of the way that we think. You know, we are usually scared of losses, you know, and then obviously once that cloud our judgment, we won't be able to make a proper informed decision, you know. And trading has got stages, like probably you have to first of all be good at your analysis, know the reason why you are analyzing what you are analyzing, obviously now be able to act on that, and whether that decision that you take to act on it, whether it's not going to be right or be wrong, that is something that you do not have control of. So there's no trader out there that can tell you that they have any system that is 100% efficient, or a system that will be there forever. No, we are trading against all sorts of different kind of human emotion. Number one, there's so many things that's related to trading. At the same time, the orders that's coming into the market, those ones too, they have their own position. And all this is now becoming so critical in this current day market, for us to see that the market is the same, but at the same time, when it adjusts, can we adjust along the same line with it? You know, so there's no any financial instrument, whether it is forex, whether it is options, whether it is futures, whether it is the indices, the equities, the cryptocurrency, that does not have an human emotion embedded into it, because the investors themselves, they are human beings. If you look at what is currently happening on gold, right about now, where is all these funds coming from? All the funds are coming from the current economical situation. The gold continue to rise higher. Charts like NASDAQ, they continue to rise higher, and so many newbie traders continue to be looking for when are things really going to crash? You know, once you start to have that kind of thought process or opinion at the back of a market that is rising, without you seeing the valid reason for that to happen, it becomes very challenging to be successful. The majority of the time, it's all about riding with the flow or with whatever is happening without giving yourself too much of concern, whether it is up and then now that it has gone up, then it should have the price is too expensive, it should have fall. All those thoughts are very challenging. So the first key thing is to look at the price, look at the market, believe in your analysis. If it says it's going up, then it's going up. There's no two way about it. If it's going to come down, then you have to start seeing some crack in the uptrend for you to know that, okay, it's not going to come down. Because a lot of people will be, gold at 2000, there's so many analysis that's done in terms of reversal analysis to see whether the price of gold is going to dip at certain points. So many patterns has failed, which I myself am watching. But how do you explain that? You know, that's the reason why I keep saying, if you believe in one particular thing, it can cloud your judgment in how you make your decision. So probably we have some ardent learners of harmonics, and the only thing they know is harmonics, and they've got this back pattern on gold that they're looking for the sell, and technically the bad pattern is valid. It's not like as if it's not valid, but unfortunately, if the bad pattern does not trigger the right results, that will lead to disappointment. That's another thing, loss of confidence, disappointment in the system. Be thinking, wow, okay, after all this due diligence that I've done, and then obviously things does not work around the way that I want it to work around, then it becomes very challenging. If you have any charts that you want us to look at, kindly send it across as well so that we can have a look at it. So you gotta have to understand a couple of few things in terms of fundamentals a little bit, then technical is important at the same time, but overall, all those knowledge that you have when it comes to the playing field, the way that you're going to interact with the field of play can be very, very challenging sometimes. So the first thing that I will go through is this. I'll go through what is currently happening in the market, what is having strength, what is losing strength. You know, we had the NFP on Friday, which was yesterday. So when you look at this, Forex Life, FX news for our payrolls, provide a dollar boost. Yeah, and then I think we need to look at the dollar as well. Things are shaping up nicely in that field after a significant decline. And why do we have all this decline? I mean, the time that we have right now in this current economic dispensation is completely different to the time that we were in 2008 when we have things like recession, and the government are not making quick decision enough to say whether they're going to bail out the economy or not. They were lost for a moment, like they were literally clouded up as well. They didn't want to pump any money in, and then obviously the market start falling considerably. All right. So, but this time around, when you look at the dollar, it's almost like the same thing. We have the economy being supported significantly by all the central banks. There's a lot of money being pumped into this market so that the market can at least hold itself, so that the market can at least stabilize itself. But, you know, when there is a fault, there is a fault, whether anyone likes it or not. Sooner or later, when those orders accumulated and in one way or the other there's a default, in one way or the other someone cannot meet up with payment, then problem first will get started. All right, so looking at this dollar chart, we can see on the monthly, which is very essential. The monthly time frame is very essential in your trading. It kind of cements your direction in a way. And I will say, if you are a trader and you've not been looking at the longer time frame, that might be where you are really missing out, because once the direction is fixed, once I know that the direction is down, then obviously if I'm taking a buy trade, I should be thinking of, am I really hurting myself or not? You know, if I'm taking a buy trade when the direction is down. And then, so the monthly becomes very important for us to understand. So also the weekly and then the daily, then we start planning towards what picture they are giving us. All right. So looking at the dollar monthly chart, would I be interested in all this low area? Or would I be considering what is actually happening over here, right? So when the pressure is pressing down, there's every possibility that it can break anywhere, irrespective of however how long-term low is um, or how short-term low is. The pressure, the significance of the pressure is to the downside. If things are going to change around, then like I said, you have to start seeing these changes from the lower time frame, right? And the lower time frame will be giving you the sign of trend change. But once the direction is cemented in a way on the longer term chart, that's the direction that things tend to go. So that is equally important. All right. So I was trying to do a little experiment to see how the market is performing, whether you can still have this strong belief that a little amount of money, you only need a little amount of money in this market to become successful. You do not really need large amounts of money, and everything depends on skill. You know, the level of skill acquisition is very, very important. If you are not working on that skill to understand what is right and then know how to work around it and know the right way to actually look at the market beyond just the price alone, the time too becomes a very, very important aspect of the chart. That's the reason why we have the price on the y-axis and then the time on the x-axis. So all those becomes very, very important in understanding what the price does. So I was looking at a particular opportunity, starting with a little change and then growing that consistently and considerably. And I was not so surprised, but I just know that, okay, if everyone can do it the way that I look at it, sometimes a lot of people will be successful in this field as well. So I started this life account with a £50, right? And then currently you can see that it started recently, just on the 23rd of July. I just wanted to find out the possibilities. You know, sometimes when you are in a field, you have to consistently be testing out what the market is saying, the current condition of the market, and then see what chances are there for new entrants into the market, the kind of performance that people can actually get in this market, right? So with experience, you can do anything with this market. So starting with £50, I think I've withdrawn just about £300 out of it, right? And then the rest is just profit. So the account is currently at £2,043, and then obviously there's still some trade going on. But what was I doing? I was making sure that each and every trade that goes into the market is important, that you have stop loss at the back of it. All right. Out of those gains, there has been about £216 commission to the broker, which obviously when I trade, they make money, you know. But how do I make sure that, okay, I'm supporting the broker and then at the same time, I'm making more than the broker? It has to go into the calculation. So from the 23rd of July, there has been about 7,453 pips that have ripped out of the market. I have encountered some losses. The largest one is about 35 pounds and 20. And then obviously I took about 449 trades. 449 trades was what I took in that short period of time, you know. But the way that I will be doing it might be completely different from the way that any other newbie will be doing it. But these are possibilities. These are things that can be done. And in some cases, you will realize that I still have some trades on in the essence of having 288 pips. And obviously, those are still pips that I still have on in the market. And which means I'm not just trading a short-term position. I'm combining both short-term opportunities with long-term opportunities. You will be able to see that the dates, right? You'll be able to see that I have some position on from the 28th of January, let's see. The dates that, all right, so my internet is playing up. 1 second, please. Right. Good question. Damien. Right, so can you hear me? I hope you can all hear me. Sorry, I got disconnected. Right. So there is an advantage of using CTrader over traditional MT4. I mean, I've used also a different kind of platform in my entire life. I started with a platform called CQG, and that is a very good platform. Some of the advantage of using CTrader, say for example, if you give me a chart, give me any, if you give me any instrument, let's say any instrument, let's say GBP USD, right? So if I populate it on this CTrader platform, I'll be able to do, I think the, what was it called? The MetaTrader offers that too, but not as robust as the CTrader. I don't know whether it's my internet that's playing up. Yeah, it's still trying to load in one way or the other. Let me see. The internet is working, but the chat is not loading. All right, so one thing is with the IC market CTrader or with any CTrader, you can basically perform all your operation on, you can basically perform all your operation on the charts. And what I mean by that is both your risk management, your position sizing, adjustment and everything can basically be performed on the chart. All right, so say for example, looking at this chart, and it's got so many features in a way that I enjoy the robust of the technology that's involved. All right, so this is it on the web platform. If I need to put another into the market right now, I'll be able to definitely put another into the market, whether the market is open or closed, right? I can put a limit or a stop order into the market, right? In some cases on MetaTrader, you won't be able to do that. I can drag my stop in an area and know that, okay, that's £2.78 worth of stop that I'm encountering, and then obviously my target profit, I can do it that way as well. I know where my target profit is. All right, so this is basically one part of it. The other part of it that I like that CTrader offers that traditional MetaTrader does not offer is this. If I click on this position, right, as much as I've got internet, I can do like trailing stop, right? So I can have take profit in different position on the chart. Say, for example, I want to have my take profit at, and how do I calculate my take profit? I'm going to show you that one as well. So I want to have my, say, for example, if I look at this, this is pound Aussie, right? And I want to calculate take profit, I will go to matter.net, right? I still use my MT4, and let's say my MT4, right? So I'll go to matter.net and I'll go to possibly forex volatility, and then I will look at pound Aussie, and then I'm seeing something like 157 pips. So say, for example, the day is Tuesday, it will tell me I can make about 182 pips. This day is Monday, 138 pips, 152 pips, 159 pips, 145 pips, just for me to have an idea of what I'm looking for on that particular day. So if I look at my, let's say on a Friday, which was last week, we were looking for 145 pips, right? Then I come to the market anytime. I don't know what time I come. Maybe I come to the market during the US session and I measure. Obviously, the Asian session has done about 73 pips, right? The London session, out of that, 73 pips was included. So in one way or the other, we find a low over here. We find a double bottom low, right? And that low does not even take out the first low. In one way or the other, some kind of funny head and shoulder pattern. So if I'm joining in from this low, I'm already looking at a target of about 145 pips. So I know that maybe that 145 pips will be somewhere around there. And that was 10 weeks ago. So it's quite important for me to adjust this and know that, okay, this is 10 weeks. You can say, let's see what has been happening over the last 2 weeks, provided the market has changed a lot. Then over the last 2 weeks, I'll put 2 weeks over there. I'll put my currency right here. And we want single currency, so that says 144 pips on the average. If I click it, I will look at it, and this one says 131 pips for Friday, all right? Then I'll look down as well. I'll see whether this currency is actually increasing in volatility, which means this is literally going up, or whether it's coming down. So if this is going up, I know that most probably, potentially sometimes, we can do more than that 131 pips, and sometimes maybe we just do about that range. So I know for a fact that, okay, because we have a double bottom in a way, that means we've reached the end of this price going down in for one reason or the other. The area where we even have the double bottom as well is an area where it's making sense as well. So this makes a total of about 118 pips on the day. But if I start this session when the session opens, right, then I know that, okay, I'm looking for about 130 something pips. If the market gives me all those 130 something pips, then I'm nice. If the market does not give me all those 130 something pips, then it's not a problem. Then I'll come here. I'll just say first take profit, second take profit, even third take profit. Depends if that is a day trade. So I can look at this and say 130 something pips divided by 3. Then I know straightforward that's about 40 pips or thereabout. That'll give me about 120, 40, and then 40 at the same time as well. So the position that I'm looking at, let's say 10K position, which is 0.10 position. I can then divide this and say 2K and say 2K and say maybe 2K or even 4K. So I know that already this would have been an 8K position that's come out of my trade. If so this will be 40, this will be 80, and this will be 120. Sorry, that's why they are red. So when we reach 40 pips, I'll take 2K position now, which is 0.02. I'll take another 0.02 out at the same time and another 0.04 out at the same time, which means I'm left with maybe 0.02 to in case the price continues to move in a trend following my monthly trend, right? So this functionality is there too, but your internet have to be on to use this stop adjustment. So I don't have to be looking at my chart all the time to take out those profit. I can preset it with CTrader. So that's another advantage of CTrader. All right, so going back to our discussion, I'll put in the trades. I'll make sure that the stop is there. But where do I get my trade level from? That is the one important thing that is important for every trader. How was I able to still be in this trade? I'm not going to say that you'll be able to do it in 1 day or in 2 days, but with practice, everything is possible. How am I able to stay in this trade and have confidence that the trade is still going to be positive? You know, that is very important as well. I'm going to reload this in a second. I think I've got that platform over here. All right, so when you look at the pound card trade, that's one trade that I've been in and I'm still adding on position, right? And then the price literally surged up to this particular level. Okay, so I put in a fake trade here. I don't really know. And that's another thing that entry that I put in that I do not really need. So let's first of all start looking at this on a monthly point of view. The first thing that I want to do is when I look at the monthly chart, I'm looking at, 1 second. Sorry, someone. Thank you, Robert. It's fine today. I think we're gonna have beyond that. Thank you. Right. So the 1 second, please. And then it's robust as well. CTrader platform. I can have it on the web if the app is playing up. Is when I look at the chart, I want to see a couple of things that's looking structurally sensible. It's just the basic things that we've known, right? And this chart is making a low over here, right? And then we have this congestion, it rises up, give us an impulsive move, correction, continuation, and then we actually come down again, right? So one key thing is this, we have this low right here. We have a next low right here. And then we have another higher low over here, right? And then I'm coming in, I can see that the lows are moving up, right? From this low, we have a much more higher low, we have a higher high, price comes down and give us what? Another higher low. And this higher low, the key thing about this higher low is this. Let me see where I can use this one now. And then we go to monthly. Okay, let me clear off this. So you can equally see the way the low is increasing, low, higher low, price rise up, then we start to have another higher low, higher. Then over here now, you can see that we have this is more or less like a double bottom low. Okay, and in that double bottom low, and this is a monthly chart, so that you can be in line with direction. Then after this double bottom low, you can see that we have another low here, which is higher. We have another low here, which is higher. What does that really translate to in the market over a long period of time, especially on a monthly chart? It means there are no sell orders that are willing to be filled below here, right? And over a long period of time, there are no more sell orders below here. That's why we keep having this low over here, right? And then over a long period of time as well, we're talking about monthly, there are no sell orders right here anymore. And price gravitates up a little bit, right? And when we get to here, right? And then give us this higher low as well. There are no more what? Sell orders below here, right? So, and then price gravitate to this high as well. There are no more sell orders below there, all right? All right, so sorry about the cutting off. My internet is not worshiping me rather now. Having to understand that the potential for this trade starts to gravitate towards the upside. So if you have this idea at the back of your mind, the way that the low is going up, which direction would you really think the longer term chart is going? Which direction would you think the longer term chart is going? Oh, I need to share my screen. Sorry. Right. So this is where we are. So we're looking at the monthly chart and we can see the way the low is gravitating up. Low here, we have a low here, we have another low here, we have the low going up, another low in this area, right, which is higher than this low. We have another low in this area, which is higher than this low, and another low in this area, which is higher than this low, right? When you have that information and you're looking at the charts, which direction do you think the chart is going? Which direction do you think the price is going? Up or down? What will be your bias?
Definitely, we should be thinking of going up.
All right, so this is pound card. All right, so once you know that the price is going up, then you know that every sell that you see in this chart, all you want to do for now is fade it. Or the one thing that you want to do with the sell is once you see a sell opportunity coming in on the lower time frame, those are your best time to start thinking of where am I going to enter the trade. So the monthly has given you a fixed perspective. And you know that the monthly chart is not going to occur in one day. The monthly chart takes 30 days to roll, right? So those are the ways that you now start to be building your thought process. That's what I'm talking about. Your thought process really matters when it comes to which direction you want to go, right? So then after knowing that, the next thing that you want to know is this guy is going up, right? And as much as this guy is going up, if I see a sell opportunity, that sell opportunity, I want to convert it to an opportunity for me to take a trade, right? So if I do one thing quickly, because we can't see what really is going on there, but there's a lot of position that was taken over the last month. And then this week, we add a sell. We have some sell opportunities coming into the market, right? When those sell opportunities come into the market, when we look at the daily, the price went all the way down to that area, yeah? And then as the price went all the way down to that area, I decided to take on some more buy opportunities. The first buy opportunities that I took was around when the price was higher, right? When we were breaking out of this high, right? That was the first buy opportunity that I took. The price rise for 1, 2, 3, 4, about 5 days. And then after that 5 days of rise, then we see 1, 2, 3, 4 days of sell-off, right? A lot of people will see this and then they will freak out of the market. But look at this candle. This is one single impulsive candle that got retraced. You should be expecting the retracement, whether you like it or not. You know, that's part of the that's part of trading. But you could have possibly take some profit when. Please mute everyone. Okay, no problems, boss. Right. So when you see a large candle retracement, you know, large candle, the market is going to take a breather compared to what has been happening. So when I see this large candle, I know I'm going to suffer some retracement, right? I know that, okay, if I haven't started taking some profits way earlier, I'm going to suffer some retracement. So after an unusually large candle, there's every reason for price to take a breather. Price sometimes will not just continue, especially when this candle hasn't been the candle that we've seen previously before. So those are part of the price behavior, which you have to understand. So there's going to be a retracement, and that retracement now is the thing whereby I have to be careful and do what, and either wait for the retracement to come to an end, okay, and then take some more position to take the buy up. As simple as a charts play, right? But why do we continue to have problems? It's because of the way that we think. As human beings, especially men, I think women are still good in trading than men, right? Kids are better off in trading because they look at it as a game. You know, we can go through some strategy that are very, very simple, and then you look at it as a game. If it works out, you don't have a problem. If it does not work out, as a kid, when a kid is playing games, if they lose, they don't have a problem. They don't put so much emotion at the back of that loss that they encounter in that game. If it's Tetris, if it's Nintendo, irrespective of whatever game that you are playing, once you encounter a loss, that wouldn't stop you from not playing the game tomorrow. I mean, for all the gamers, all the little kids that play game. All right. So when this is coming down, that's an opportunity for me to be saying to myself, where am I going to find the next best position to go in? But some other little technicalities goes into that, which I'm going to share with you, which I'm going to discuss with you, so that at least you can see some of the things that I would have put together first of all. So first of all, we look at the monthly chart. We put a picture in that monthly chart and know where that monthly chart is saying that it's going, right? So once the monthly chart says that it's going in that particular direction, that is the direction where we want to fix our mind and know that, okay, we can reap quite a lot of pips. Number one, not only that, we can stay in that trade in as much as the direction is in compliance with what the monthly chart is going to be doing. So then I will move to my what's it called, to my advanced method of looking at things. Say for example, I'm looking at pound card and I want to look at it on I want to look at it on market profile. Okay, and then I'll be looking at it on monthly time frame. Okay, and when I'm looking at the market profile, it gives me, I look at different methods of analyzing price, but the ones that I favor the most, right, is market profile. Market profile tend to cement that direction for me at the same time as well when I look at it, and then it gives me some areas where I can pinpoint and say to myself that, okay, when price comes to this area, this is where I need to watch. All right. So that last month on market profile went all the way significantly strong like this on the monthly chart, right? And then I know that we have an area that is called point of control. And the point of control is the area where we have the largest number of trades taking place. Number one, where we have the largest number of either buyers or sellers in the market at the same time as well. So whoever is in control, they will have much power in that point of control. So once the price has moved above the point of control of last month, I know that the traders that were able to push that price above the point of control of last month, which is 1.7100, they are doing that. They are initiating those positions with conviction. They are initiating those positions with confidence. They are not responding to price. There's two types of ways that you can respond to, that you can look at price, right? You can either be looking at price from a confidence point of view with conviction, right? And then you can be looking at price in a way whereby you are just responding to the opportunities that comes into the market, right? So with some school of thought, we say that you react, you know, but there's a lot that goes into price more than just reacting. Some movements in price is all about initiative buying or initiative selling. So when the movement is initiative buying, which means the traders, they've got total confidence that this is what we want to do. The imbalance in the market favors one part of the orders than the other, then I knew that if I follow those traders, I will be in the right direction at the same time as well. So a tool that I use for edge and to have an edge in the market. So when I look at this week now, however, I can see that the price has moved above a point of control of 1.7350. This is a point of control. And what that is telling me is that is the area where I have the largest number of buyers and sellers transacting in the market. And then it's telling me at the same time that the buyers are even more than the sellers. The buy orders are even more than the sell orders in the market. So I know when price come back to 1.7350, I'm expecting some kind of reaction. So we've traded above it. Now we're coming back into it. So the straight thing that I'll do is I'll just go and look for 1.7350 on my charts. All right. So 1.7350 is a key technical area that I know that I'm expecting the buyers to make a decision. So if I come here and I stick my 1.7350, this kind of limits my job to just knowing that, okay, this is the area where I want to have. If I'm late, say for example, I've put an alert on my phone. If I'm late, then I might not be able to catch the exact number. Sometimes if I'm in my full mode, I will trade that exact 1.7350. So what I wanted to do at 1.7350 is see exactly what is going to happen over there, right? So I'm not just going to say that 1.7350, I want to put another over there. So if we go to a 15-minute chart, or a 1 hour chart, or even 4 hour chart. So what I'll do again is, once I know that area, then I want to know what my pattern is saying. And then I will do that one for you in a separate manner. So okay, so I put the vertical line over here. So price comes down to 1.7350. In this case, right, we were so lucky that it almost come to it to the T. In some cases, price can play around this area, and that's why I wanted to show you that in a situation whereby price is playing around the area, how do I approach it? All right, so that's one key thing. 1.7350 is important for me, right? Over here, there is previous reaction around 1.7350 as well. Technically, that is important. So I'm expecting that if price goes up and price is coming back down to an area of previous, you will call it a resistance, or area where the role will be reversed, a role reversal area. This is a previous resistance. When price breaks it, that resistance will be reversed and turned into support. Lining up with my point of control, I know that I'm expecting a blast over there. All right, I know that I'm expecting a blast over there. So that blast came in, right? I started to see that on the first time when the price wanted to get there, we start getting scared, right? You can see that in the market that, okay, this fear factor that's pushing the price down here is understanding that there are some orders over here, right? Whether we can see it before it happens or not, that's another key thing. And then understanding that as soon as price start coming down to 1.7350, I didn't catch it immediately, but I'm seeing all this reaction. And all this reaction is translating to what is it's so sensible to me that, okay, we have a doji over here, right? Near my area, okay? So I decided to take a trade. Then we come back down to come and retest 1.7350. So knowing those areas, first of all, limits where I'm going to be thinking of where is my stop, right? And then having the patience to wait for it, right? You can see that I took some impatient trades over here, but still my overall trade is still down here. Having the patience to wait for it is important at the same time as well. So I'm going to be looking at things like structure on the 4 hour chart now, and be saying, what is my 4 hour chart actually saying, right? And by this time, I'm already looking onto my Wolsey or on my trading view to be able to get an exact technical reason for me to now enter the trade on the trading view. All right, so I know I have a channel over here. Let me delete this one. So bring this down like that. Although it's not going to do the work, but obviously the breakout of that is what some traders are going to be waiting for, and the retest of that, right? So now you can see that if you're trading technically alone, right, the move you want to see it occurring, it doesn't give you an edge to be able to take a trade below here. And that's what, as a trader, you are constantly looking for because of the stop loss, right? That edge is very, very important, because if the stop loss is going to be a stop loss of, okay, we're going to break above here and then we'll retest this, right? Before we start to go up, then you're going to be thinking of your stop loss is going to be where? It's going to be down here. So about 48 pips if you are lucky. To put in that 48 pips or 50 pips worth of stop, then it's good. But for me personally, once I know this area, right, I can say to myself that I want to put in maybe about 3, 4, 5, or 6 trades in that particular area. I can say to myself, if I'm going to be using a normal 50 pip stop loss, it's just so that I know that, okay, the moment price hits that 50 pip stop loss, which I don't need, I only need maybe about 5, 7 to 10 pips stop loss in those areas. And that is the honest truth, right? And that is the way that I was able to consistently turn around that 50 pound just because that edge is there, right? Knowing where the edge is and knowing how to play the edge can give you a leverage to understand how to use the leverage that the broker is giving you, right? And that could be a continuous challenge for most traders all through the years of their life, because understanding where the edge is and believing, having that belief that, okay, this is where the edge is. This is where I'm going to have with a couple of more other reasons. If we start to put the other reasons together, right, having have a reasons for that conviction. If we start to put other reasons together, say, for example, and I'll decide to put a Fibonacci here, you can still see that with my Fibonacci, we didn't quite hit home. Let me say, all right. So that Fibonacci, we tested the 38%.
The
Right?
volume is low, please.
The volume is low. Sorry, how about now? Is it better? Is it better now?
Yeah.
All right, no problems. Great. So once I know my edge position, if I'm looking at Fibonacci at 38.2% retracement of this entire move, which occurs at this area that's going to say 61A. But obviously, if I decide to do it right, that'll be the 38.2%. Right, so what I'm trying to give you over here, or what I've just said over the last 5-10 minutes, that is the secret, and to be honest with you, that secret, you won't get it. You will be looking for it, you'll be finding it, you won't get it because it requires a lot of not just training. It requires you to follow the right minded person that's willing to even divulge it or show it to you, or to say, okay, this is the way that I look at the market. These are the kind of things that I do, that I've been doing over time and time again to reap benefit, to even try to put it at the back of a 50 pound account, and then obviously grow that 50 pound account to, where are we? I think the 50 pound, yeah, to grow that 50 pound account consistently within 23rd of July. How many days is that? So 23rd of July, 1, 2, right. So within 3 weeks, you won't get that kind of interest rate from anyone, right? You won't get that kind of interest rate from anybody. How many percentage is that? Let's see, calculate. 50 is equal to 100, 2,200, maybe about 4,000%. 100 divided by 50. All right, so 4,400%. You don't get that from anybody in 3 weeks, right? So if I'm saying build on the skill, build on the skill, build on the skill, the skill will liberate you, right? It's not about I want to trade for you or I can trade for you. That is not liberation. They said you can take it's better you give a man it's better you teach a man how to fish rather than giving a man fish to eat, So if you can develop yourself from this free training, from having a spectacular view of the market and understanding the market, and then taking advantage of all the opportunities, amazing things can happen. But if you give up before time, because you're not going to be willing to put in the work, because understanding small little things and believing in it can pose very, very challenging, then obviously to succeed can be very challenging. But because you've stayed all along, you are always there, you are constantly learning. Every other thing that you've learned to is very important. But when it gets to certain points that you want to put your risk at the back of it, there are so many other things that I will look into as a tool, and then be able to say that, okay, for good 3 weeks, I think in some of the position, maybe I've been in it for 3 weeks and I'm still in it because I was able to do the little thing, spot the trend, understand where the trend is going, and then use the little tools that I have to back up re-entering and then re-entering and re-entering. So in a way, you may not necessarily need more than one pair in a way to succeed in this business. And when I look at it, although I will flex my muscle a little bit, when I look at it, when you look at what was traded, pound yen was traded, although in huge volume, but just 20 trades, right? Pound card was the one that I traded 160 times, right? So when you find one edge, one single edge can translate into a lot of profit for you more than anything else. And when you look at it, I think I made about 94% winning trades. And these are the key values that's very, very important. How many times is when I take a trade in that position becomes a winning trade? 94%, right? When I take a trade on Aussie yen, 90%, right? So, and those are the statistics that are very, very important on your edge. What is my edge? If I have an edge and I'm going to be using that edge, is that edge going to be giving me confidence to continue to follow, right? So if I'm taking my trade based on that edge, am I going to be achieving a result that will give me confidence, peace of mind, that will let me be competent in the market, that would, even if the trade goes wrong, I won't be so devastated to a point where I'll be thinking, if I take the trade and it goes wrong, maybe I accidentally click a sell instead of a buy. Sometimes procedural risk occurs in the market. Sometimes it does happen to anybody, right? So that edge is very, very important. And that edge, I didn't find it if I'm taking the trades at the back of 38.2% retracement. If I'm waiting for the 50% retracement, I will miss it at the same time as well. So now you can now start to see the intricacies when it comes to understanding what I will be talking about, the reason why I'll be talking about what I'll be talking about, the way that I'll be saying it. Sometimes it's so challenging for you to understand, but just because everybody follows the same school of thought, support, resistance, I'm not saying those things are not there, right? But understanding that orders comes with prices on the y-axis, understanding time, and how to match them together goes a very, very long way in the way that the market works, right? But if I come into the market and start telling you about price, time, and this and that alone, you won't be interested. You won't be much interested because it's not the technical drawings that you are looking for. A lot of traders say all sorts of different kind of things that, yeah, I'm just a technical trader. I'm just a fundamental trader. Some technical traders are not even in depth in their technicals. Some fundamental traders are not even in depth in their fundamentals, but everything all falls into where is the orders in the market. All right. Where is the orders in the market? Where is the imbalance in the market? If we can spot where the imbalance is, right? If I can know for a fact, and you see, can you all hear me? Right. So if I can know for a fact that there's an imbalance over here, right, and there will be much buyers over here than sellers, then that's all I think I need. And that's the area where I want to concentrate on. And that's the area where I want to write. So if I can show you some other areas of imbalances on the upcoming week, then hopefully you will be able to capitalize on the market in that manner. This, we've passed certain area to discuss what's actually happening here again. It's much more deeper. You will be lost, right? Because when it comes to market profile, it goes deeper than just, right. You can see the initiative buying. The moment we trade above certain area, it's a go, right? The moment we trade above that point of control in an initiative manner, the buyers are ready. They want to explode. So those key things really matters. But let's have a look at this euro dollar. You can see that on the monthly, we've made the low. Now we've made higher low, right? And obviously for us to reverse the higher low that's made, let's look at it here. 1 second. Euro dollar.
Mr. Bola, please, how did you identify the point of control?
How do you?
Identify the point of control in that monthly chart.
All right, 1 second. Who is asking?
Is Victoria Jake?
All right, Victoria. Okay, so identifying the point of control is putting together the total number of buyers and the total number of sellers and looking at who is much more weighty than the other, who has more orders in the market than the other. So that is one aspect of the profile, right? And that calculation, I can do it on my own, right? Because I can show you the technicalities of doing it and doing it on your own. And let me see. And I can show you what it entails because this is what works on futures market at the same time as well. And this is what it entails. Hold on while this chart populates. It's a day-to-day calculation of the orders, right? And how do I identify if the market opens? This is the last trading day that we have in the, what's it called? In the euro. So each 30-minute auctions, what I mean by that is each 30-minute time frame, right? It's an auction that's going on, but each 30-minute time frame is represented by a letter, okay? And this is more deeper. I train this especially for people who want to follow mentoring, but they are identified by a letter. And what that letter means is basically, during this 30 minutes, we traded from, let me get a whiteboard. Right. Okay, I think I even have let me see, shit. I have the process somewhere at the same time as well. I will be able to show you how the mechanics work. All right. So how do I get a point of control? Say, for example, this is pound yen prices, okay? If the price moves from 132.69 to 132.56 during the first 30 minutes that the market is open, that will be represented as A, right? Okay, if the price moves from 132.63, for example.
I'm seeing only a whiteboard, oh.
Sorry?
I'm seeing a whiteboard.
Oh,
I'm not seeing anything.
Whiteboard, sorry.
Yeah.
I've shared the whiteboard first of all. All right. Can you see my
Yes,
Screen
yes,
now.
yes.
Right. So if the price moved from 132.69 to 132.56 during the first 30 minutes of the market open, right? Then that will be represented each and every price that the price move 132.69, 132.60. As the price is going down, that will be represented with A, right? Such that when we get to 132.56, when the 30 minutes wanted to close, the price comes back up to 132.58, which means we go down, right? And then we actually come back up towards the close, right? When the second 30 minutes open, that opens at 132.58, and the price didn't move that much. It just moves up to here. It just moved from 132.58 to 132.63, right? So this is the first 30 minutes of the market open. The first 30 minutes of the market open is the A. The second 30 minutes of the market open is the B, okay? All right. So going forward, the same thing, when the C period, which is the third 30 minutes of the market open, occurs, that is represented by the C, which means during the C period now, right, what the traders does is they actually buy, right? So I'll explain to you. During the A period, we have what is called a selling tail going on. We have a sell process in the first period. So as market open, the price just went down. The traders decide to sell, and there are all sorts of different kind of reasons why the traders will decide to sell. So when that sell process goes in, right, the second period now, yeah, which is the second 30 minutes, they decide not to, they believe that the selling process is now too much, okay? And when the selling process is too much, price comes back up a little bit, right? So they find buyers coming into the market to push the price back up. Right? The C period, which is the same over here, the buyers again come into the market to push the price back up. All right. So you won't be seeing the candles alone, but you'll be seeing what the buyers and the sellers does at the same time as well. The D period, what that is telling us is that after the buyers push the price up in the C period to come to this area, what then tends to happen in the D period is the C period encounter a little bit of sell, and then the D period couldn't push price up or down. We just get stuck over here. All right. So as price is building up in this area, you can see that in this area we only have the A's, right? Over here we have two figures. Over here we have three, but over here we start to have what? 4. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. What this is telling us is price is spending more time in this area. That's why we start to have congestion in this area, right? And if price is spending more time in one area more than the other areas, what it's telling us is there are so many exchanges in that area going on. There's two-sided trade going on. The buyers and sellers are interacting. Till it will get to a point whereby it will look like one area comes out more than the other. Like in this case, after all those buying and selling, when it gets to this area, we have so many interactions of buying and sellers over here, such that in this area now, we become our point of control because we spend so much time trading in that area, okay? And then in that point of control, we can actually calculate the winner at the same time as well. But this is how we determine the point of control, the numbers of the buyers and sellers that's coming into the market and the time that they are spending in that particular time, in that particular location, the amount of time they spend in that particular location. So when you look at this now, you can see this chart, the way that it's built, right? I will put a recording of this on YouTube, which you can watch it again. In this area, this is where the point of control is because it spends so much time, and you can see it evidently as well. When the price comes down, right, we didn't have much, but you can see 1, 2, 3, 4 candles was over here. They spent time over here. This could have been the earlier point of control, right? And that point of control was not quite long forgotten because price continued to move down. So we start to see values somewhere lower than the first area where we have the congestion. So when you look at here now, from here, we have one candle here, one candle here, one candle here. This is 3 already. 1, 2, 3, 4, 5, 6. Another 6 in the same area. And then you can see that in this area, we have 1, 2, 3, all in this area. This is where we have so much trading, right? What happened over here, there is low volume of buyers, right? Which means the sellers was able to capitalize on the market. But in this area, we can see there's a lot of them over here. There's a lot of buying and selling activities that actually take place. Even as we move down, we still come back to this area, and then there's still activities that's going there. Meanwhile, when price comes down this way, you can see the profile is actually thin. There's not much activities, but overall, we can determine that even as this one comes out, right, which means there's a lot of trading activities over here, we can realize that, or we understand that this place is where that becomes our point of control. Right, yeah, so it requires a little bit of teaching and understanding. And in that point of control, this is just one aspect of the profile. The point of control is just where the most trading activities occur, where price spend the most of the time. And that is what we call value. So for people who does value investing or value trading, there's a lot that goes into that. That is what we call value. That is where the value is for the day. That is the price that the traders, both the buyers and sellers, were able to do two-sided trade without extreme loss. So say, for example, the price did not move it. All right, say, for example, now, let's have a look at it. Any trader that managed to trade around this area can easily come out of their position. 19 pips, 11 pips, right? And price trades in that area so many times. So that is the point of control. That is where price spends most of the time. All right. So that is one thing. So for Euro, like I'm saying, we've traded above the point of control. The traders are executed that trade. They are initiative in nature, which means they have confidence that they're going to go up. They are not responding to opportunities. Like I said, there are two types of traders: the traders who respond to opportunities and the traders who actually initiate the opportunity. So when you initiate something, it means you are in control. It's your company, it's your drive. You are more than happy to go in that direction, you know. So the way that I will be seeing price is completely different from seeing it just the price is going up. I'm seeing it with the strength at the back of that price to know that this is going to continue. All right. So that's one aspect that I wanted to teach today for you to understand. The second aspect, right? Let me see who is here. Some people ask me some question. Is Neil here? I don't know if Neil is in the room, probably under any name or whatever. All right. So, but I will get into it. So in terms of timing, that's number one key concept that I use for timing, right? And timing for me is not exactly about what timing occurs. It's about what when we get to that price level, right? It's not about, yeah, it's going to happen during the Asian session, or it's going to happen during the London session, or it's going to happen during the American session. No, it's about what time did we get to that level where I know that so many activities occur. That is timing. That is the way that I view timing, you know. So a lot of people are so bothered about the question of timing and how do I time my trading, and then how do I negate against this whipsaw and this and that. So when it comes to whipsaw and all those things, it's just still because the trade location is not the best of the trade location, right? So what I've given you today as an edge are those trade location. If your trade location is the best of trade location, you will be laughing. You'll just be in the market like, okay, I'm laughing. Because in that particular location, you will realize the way that the price is going to act over there. When you look at it, let's investigate this. Look at the way before this price rise up, right? Say we have this month that went all the way up to that, right? Before we rise up, we come back to test the previous month's point of control, right? The previous month point of control at 1.118. And when we get there, the price did not even trade it. The value was 1.1180 and the price traded, what is the low? The low was 1.1185, right? That was the low that we've seen. So in that area, 1.1180, 1.1185, 5 pips, right? 5 pips alone was what was the edge for me to be able to capitalize on this trade and take it to the upside. So knowing that, in a way, gives me some kind of security at the back of my trading decision. And that 5 pips, literally, for the people who knows that, can do what? Can give them a trade of 753 pips. Literally, that was the risk in that market for that month. 5 pips. You know, when someone is saying it, it will look like I say, with this market that goes up and down. But when you start to understand the scientific method of organizing data, and this is what this is all about, right? It's not just about, yeah, I open my chart, I put this, it's not just about this. Let's see. So sometimes as we grow, we've got to advance in the way that we do things and how we do things, you know. But if I start taking you on the advanced level, trust me, you won't want to learn, because it's like I wanted to say to you that become a doctor without going through practice. That's basically what I'm trying to tell you, right? But when you understand the way to organize the data, then it will be making a lot of sense to you more than anything else. So what I'll do is I've looked at this. I've seen, oh, we have a low over here. Now we have a higher low, right? The higher low even come at the back of a month that is telling me this is excessive. We have a balance month that follows, and after that, the price starts to go up. So I've got 2 key things that's making sense to me in this, right? But obviously this trade has occurred, so it's not going to be making sense to me like the pound card, but I just want to use it as an explanation. So low, higher low, the monthly has already signaled to me that there's no more orders below here, right? So I can now fix my sense of direction to be like I say, we are going which way? We're going up. And if we're going up, all I need to do is find a way to time in my entry in that direction so that I can follow the monthly direction in the direction in which we are going. That's all in these tactics. But let's find something that's actually upcoming, should in case we find one. All right. So the pound against the dollar, I think I took this trade.
Bola.
Yes.
Hello.
Go on.
Hello.
Yeah, I can hear you.
Yeah, please. I want to confirm something. If these letters represent 30 minutes, does the point of control come up monthly, weekly?
Say that again.
Daily, 4 hour, or is 30 minutes?
Hold on 1 second. Hold on. Sorry.
If these letters
Hold on, please. Hold on. I can't really hear you clearly, but yeah, I want to try and get right. Hello?
Yeah, are you here?
Yeah, yeah.
Good. I said, if the point of control, like these numbers, the alphabet represent 30 minutes each, which you have earlier explained.
That is on the day time frame. On the monthly time frame, the profile is different. So what I did was I explain it. How do I put it? From the lowest building block.
Okay.
So it's beyond that when it comes to monthly.
All right.
But from the lowest building block, so I mean the market profile requires a different training on its own. I'm just bringing you into it little by little, but one day discussion of it is not it's not the solution to what we are talking about. But I'm just trying to show you what the edge is and how to use it, and as we go we continue to see how best we can utilize it. But the 30-minute block is the smallest building block of the market profile. So when it comes to the monthly, there's a lot that goes into it more than the that 30 minutes building block.
Okay.
Yeah. So going forward, please give me like 5 minutes. I just want to take a little bit of a break, drink a little bit of water, then we come back on. Okay. 5 minutes. I'm just gonna get water.
Look at it like every half hour, every 45 minutes. So once I engage, once I've made a trade management decision, I literally
largest online used car market. Car View changed its name to TCV. Choose from more than 90,000 cars. Exciting money back guaranteed. 24/7 customer service. TCV's 94% customer satisfaction rate. Looking for a car? TCV.
If I can't talk verbally to you, it's all about your energy, what you bring to the radio. The beat has to be infectious first. You're gonna learn about feeling software. Showed us is 3 issues. You're gonna learn about something simple. You can do this on your own if you have your computer and your mic. Watch this. I start from scratch, making a beat. Simple, and I can duplicate it. It's the freedom. It's the freedom. It's really about time versus money. It's really the freedom. The freedom to make your own schedule. You know, I trade the hours that I trade because I want to. I'm not forced to. I don't have to report to a job day to day. At the same time, I kind of make my own schedule. You want to run your trading like a business.
All right. So back now. Okay. So the one that's coming up will be the pound dollar, which we may retest 1.2970 again. Obviously, can you hear me? Can you? Can you hear me at all?
Yes,
Yeah.
we can.
All right. So the one that's coming up will be the 1.2970 area in 1.2970 area in the pound dollar. But let's have a look at it. what we wanted to do is have our risk somewhere where it is sensible, such that we will know straightforward if we need to change direction. But there's so many other things that goes into it in terms of understanding the conviction, which is what I need the most. I need to know that the traders are taking the trade at that particular point in time. They've got significant confidence, and they want to go in that particular direction. So 1.2970. So once I have that number, it does not exactly mean that I have to sit down on that number and wait for the trade in that area all the time. Sometimes the trade will get there, sometimes it wouldn't get there, but I have to look at behavior coming in towards that area, and that is what is key for me. So 1.2970, what I like about it the most is especially when prices break above it, right, and price coming back to it, right, that is the way that I like to trade this the most. And if I trade it that way, even if it's on 30 minutes, if we break above it and then we're coming back to retest it, then obviously the rate of return is always very good. So like this one now, we break above it, we're coming back to test it, we nearly get to it, right? So 1.2983. So if I know that 1.2983 and 1.2970 is just about 13 pips away, we see coming back like we're coming back towards it, right? So, and most of the time, by the time we get there and we reach it again and we possibly test it, 1.2970, that is when that trend that we are looking for, that need to keep pushing, right? Because right now we are not talking about the point of control of 30 minutes, right? And this is the nitty gritty of it. So you can see that consistently. I'm talking about the one on the longer time frame, the monthly time frame. The moment price gets there, that trend that we are looking for will now continue. So a lot of people might be looking at the pound and be saying, okay, it looks like as if the trend is going to change. We're having a double top, and then at the back of the double top, they will put so much 1,000,001 analysis at the back of it and this and that. And price will suddenly just come and test below the previous low and then rise back up. So what will be interesting to me now is 1.2970, I've got that. Then this area too will be interesting to me. All right, and those are the areas whereby I can be thinking of playing when it comes to the pound dollar going forward. So let's look at something that is so this one, it's a little bit different because we are in value area low. We are seeing some rejection. This guy can literally just pop back up, but that's not the subject of discussion for the day. The dollar card. So all we are waiting for the dollar card is to be able to come above 1.3460. 1.3460. If we can start to come above that, that's when the buyers will have full conviction to say to themselves that, okay, we have taken over, right? But until we come above it, the sellers have pushed the price down there, are called initiative sellers because they've pushed the price down into the lower part of the point of control. They are looking at this previous month at the same time as well. So some initiative buyers will be looking at this point of control of 1.3180, right? But before 1.3180, there's a level there, just this level. That one too has its own function. But 1.3180 will rise everything back up. So it's either we get to the levels before it or we get to it exactly. So those are the little intricacies that are there. And I believe Bookie even knows how to play all these levels if she's in, because I think we went through it during the training at that particular point in time. All right, so dollar card might be a good one. So the next good one is this. So what is happening on the upside can be happening on the downside as well, and things can actually reverse away from the point of control. So there a little bit of more teaching into it. And if you look at, although Oscar doesn't move that much, right? But we tested above it, and then it has moved 89 pips down. It's because of where the orders is coming from at the same time as well, coming to hit some initiative sellers region in this area. So I don't want to speak too much of time to convince us, but right. So this one, 65.10 on Aussie Swiss, you can see that that is where we are actually sitting on. We've traded above it, we've come back to retest it, right? Aussie Swiss 65.10. Well, I like the pairs that moves a lot, because those ones will give me more peak. If I look at potential peak I can get on Aussie Swiss, say Aussie Swiss, you can see that it's just about 53 pips on daily basis, right? And sometimes I want to look for more than that. Sure, booking. So 4.6510. Yeah, the reason why it works is because it's putting into consideration every single data that comes into the market. Is looking at the price, it's looking at the time that we spend, it's looking at what the traders are doing. 4.65 10. Right. So that is the area that is becoming very, very important in the Aussie Swiss, and we're coming back to test it again. So the more we stay above it, right, the more we remain in buyer until we have a significant break. When we have a significant break, and what do I mean by a significant break? I mean that until we have a break such as this, you know, until we have a significant break like that, that's deep like that, and now I'll be looking for its retest to take a shot, right? So those little intricacies is there as well. But when we are coming to it, that is the area where I want to look for reaction. And then obviously if I'm doing it on a pair that moves a lot, it kind of generates a very good return. So Aussie Swiss 65.10 is coming up. You can be taking note.
Hello, Bola. Please, how do you get chat with this alphabet?
Right. So the people that I've mentored, I give it to them.
One need to subscribe to the mentorship.
Huh?
I think one need to subscribe to the mentorship.
Say that again.
I said one need to get to the mentorship too.
Well, to be honest, I'm not doing this for the money's sake, to be honest. You know, I'm just doing it to help people. It's not like I say if I can't give it to anybody, but one thing is to give someone the tool. I believe it's not about giving the person the tool, it's about the person understanding the tool. It's about, are you really interested in taking your trading to a next level? You know, that's what it's all about. It's not about, all right, contact me privately, then we talk about that one, you know. So, and there's about it requires its own training, okay? And for everything that everyone has learned and they've been putting into practice and this and that, and they have to do another training on understanding this, can be too much. So if you're not ready for it, you will take it and drop it. All right, say for example, I was asking a question. Let's say for example now, this is the way the market works. If a large sell orders comes into the market like this, okay? And this sell orders comes into the trading floor, all right? Because people don't really understand and distinguish this. Some people are going, anything that's coming into the market is ready to absorb. Let's first of all understand that. So if you are bringing $1 trillion, $10 trillion, there's no amount of money that you are bringing into this market. And this is why a lot of people fail, that the market is not ready to absorb. So the market will take it. Some people will take it. So you come in with large amount of orders that you want to sell, anything that you want to sell in this life. Somebody's on the other side of that trade ready to buy it. All right. So as you are selling, you are telling them that, okay, I've got this kettle or I've got this pound dollar that I want to sell. I'm selling it at whatever price I'm selling it. They will absorb it. I've got more. They will continue to absorb it. When it gets to a particular point in time, the people that are absorbing it, what do you think they are doing? They are buying it, okay? So you are the seller. You've got large amounts of it. You are selling. They are actually buying it. And when they are buying it, it will get to a point in time whereby their inventory, what they are buying from you, became too long, which means they have overbought, right? And at that particular point in time, when they've overbought anything that you are selling to them, and they are looking at it that this guy is not going to stop selling, what can we do? They will now start to tell you that, okay, we can't buy it at that price anymore. You know, say for example, you are selling it to them at £100. They will now start to tell you that we can't buy at £100 anymore. Only if you are willing to sell it to us at 105. If we decide to sell it at 105 because they are the one who puts that 105, they will have to buy it. Then they keep buying. They will say to you that, oh, we can't buy it at 105 anymore. Maybe if you want to sell, if you can sell it to them. What I'm trying to say is, if you are selling to them, obviously you are selling to them at £100. So they will say to you that they can't buy it at £100 anymore. Only if you are going, they will force you to reduce the price, right? So if you reduce the price and you're still selling it, they will acquire it and they will force you to continue to reduce the price. To a point in time, if you cannot reduce the price anymore, right, then you will leave them. But if you are willing to continue to reduce the price as the price is going down, right, reducing the price as the price is going down, they will find themselves in a position whereby they will be thinking, all these things that we've acquired from you, there's nobody that we want to sell it to, right? And if there's nobody in the market that's going to take it from them, what they will do is they will now start selling it at the same time at any price. And that's why you will see erratic drop in price literally just falling. The same thing happens on the buy side, all right? So in that situation, there is something that's called imbalance. That's when imbalance got into the market. How do you understand that? That you will know that the selling will continue. How do you understand that the selling will not continue and there's nothing actually happening? You know, all those things is quite important. And these are the kind of things that you'll be able to learn. They are deep, right? But they help you to visualize, to help you to see the two-sided of the market, who is playing what, where is the imbalance, and who is holding much more power. You know, once you know who is holding much more power, those are the people that you want to follow until you see them. If they are not in the market, you don't play. The moment they come into the market, right, they will be able to move the price, right? If the price is not able to move, extend the range of the price, right, then nothing is happening. At that particular point in time, there's no need to act. Well, this is what Market Profile does for you. And Market Profile will do it in such a way that you can know the time that they come in during the Asian session. You can know the time that they come in during the London session. You can know the time that they come in during the American session at the same time as well, especially when you understand the 30-minute auction process. Let's look at something quickly. So sometimes nothing is really good to trade, you know. Sometimes there won't be anything that's very good to trade, and that is the time that we're going to be forcing the trade. But our thing is to know the right time to trade. So for example, I'm looking at pound Aussie, and pound Aussie, I even send it into the charts. Let's say, where is it? I was signifying this in the group. I said, yeah, this. But yeah, I put a lot of technicals into it, first of all, right? And I'm saying, well, I want to buy this, low risk, right? And I'll tell you the reason. And I'm targeting price to go all the way up, right? Okay, so if we look at this now, let's put it on one side. Pound yen. Is it that one? Pound Aussie, all right? So, and then we start to look at pound Aussie here. And then I'll tell you how I put it together. All right. So if we look at these two charts, so I was making the call when we were, where were we? 81.54, right? 81.54, that was when I made the call. 81.54 was when I made the call, right? And then I made a call on Friday, August 7th, okay? And then 81.54 is here. And I talked about this last week as well, that let's be ready for pound Aussie, right? That's where 81.54 is. That was a bonus trade that I gave on Friday. And then that was about, it made about 100 pips, right? It made about 100 pips from that particular level. And how would you know things like that? Before it happens, and then how would you be able to capitalize on it? It's the same chart, right? And I made a call at that particular point in time. So if we look at a pound Aussie, right? So this is the pound Aussie, right? As you can see it on the monthly, what do we have? We have a low over here, okay? We have a higher low over here. Price continue to give us higher low, all right? Where did we come and sit last month? We came to sit on the previous month's point of control, right? So that already tells me that the initiative buyers are doing what? They are ready already, you know, they have shown their interest in this, okay? So there's a couple of sellings that comes into the pound Aussie. A lot of people will be making some wrong decision at that particular point in time. This is the weekly now, and the weekly is reinforcing that as well. We have this doji, we have this bullish engulfing candle. Now look at this last week, okay? The last week come and sit down on what? Look at this area. This area is called the area of role reversal, and it's on the point of control of another month as well. What is that point of control? 1.8145, okay? 1.8145. Note that price. If we come here and we push the price to 1.8145, which is right over there. Let's check out that pound. Let's forget about all this gibberish that we all like to do, which is good, which is, I like it as well. I like technicals. It just gives me a different perspective. 1.814. What was that value? 1.8145. Is that the value? There are point of control there. 1.8157. Before I saw 1.81. Right, so there's so many points over there, which is good, and that is confluence in a way. So 1.8147 was the one that I was actually talking about, right? And so we come back to this 1.8147 over here. So if you know this before time, can you see your risk? But the good thing about it again is this. So when you now know so many things, you'll be able to tally that so many things with the same thing, right? So in this area, I've been looking at the pound Aussie, and there are a couple of other ways that I look at it as well, that I know that things are going to change, right? In this area of 1.8147, that is where the point of control is sitting. The price comes there on 4-hour chart, right? And the price started doing what? First touch, reject. Second touch, reject. A bit of a bullish. We try to break into it, you know. It even goes down about how many pips? 10 pips, 1.8137, 10 pips, right? We don't go too far because we've done well. We break above it. Now we're doing well. We're coming back to retest it, right? So there is, and I've looked at it on monthly, and it's showing me that much more bigger confirmation. Now, even the indicators are not lying on this one. People who love indicators at the same time as well, but one key thing, like I said, gives the indicator is showing a bit of a divergence, right, to the upside on this one. But one key thing that gives me confidence is for me to know that, okay, the traders that are coming in are initiative buyers. So this price gives me a little bit of a concern. The first trade that I took was here, right? I think I took this trade. Well, I didn't take this trade at the back of the MP. I take this trade at the back of a couple of few things, right? I took one trade over here somewhere, just a little position to be testing different strategy. Then when I combine the whole of the strategy, I realized that the market profile point of control was always the king. You know, it gives me, because when I split this position into three, I took one somewhere around there, I took another one somewhere around there, then I took the third one, right? But when I check, the one that's giving me more confidence, apart from the ones that I take 3 times before price rises, the market profile one is dead on the price, like literally not going too far away. 10 pips stop at the back of this, 100 pips, boom, you know. And those are the things that I believe majority of the traders need. I've seen a lot of question about then I get whipsawed out of the position, then eventually it goes my way. So how do you know? How do you see these things? How do you know which one is going to whipsaw? How do you know? Because say, for example, someone that take a trade from here, if you take a trade, if you take a buy trade from here, right, and the price goes down 50-something pips and you have maybe only $100 in your account, right? And eventually you come back to the chart and you've seen the price over here. What are you really going to say? At the end of the day, there's nobody that's got explanation for that more than, eventually it goes in my way, you know. But the trade location, that's what I will keep talking about, that I keep saying, the trade location and what is it actually matching up with, right? So matching up your trade location with a monthly perspective, okay, gives you that edge. And that is what I'm laying there on the table. You can do Fibonacci, there's nothing wrong. You can do harmonics, there's nothing wrong. But over my years and years and years of studies that I've been going back into it, that I will see use it, that I use it and use it over the time, and I see use it to be able to take a £50 account, you know, to be able to take a £50 account and turn it into £2,293 in just period of 3 weeks, it's a 2-figure that literally escalated into 4 figures. So if I keep doing that, I can escalate a 4-figure into 10-figure. It's possible. I've done it before for institution, and me putting it at the back of just a little change now, it's like each and every day the possibilities is becoming endless, and I'm getting tired of it. Like literally, I want people to actually succeed, you know, and being successful is something that I work hard for, you know, and I know that's something that you work hard for at the same time as well. And I want to do my best to hand it over to you at the same time as well, because I don't know what you can possibly do with that success. Tomorrow, maybe we form a very big group or whatever that we form, you know, but things start from small, and it's not just only going to start from small, it's going to start from small, from people who are keen, you know. If the keenness is not there to understand that I want this, it's not going to come to you. But the moment the keenness is there, right? And one thing is, you can be a baby in the field. Maybe you are just 6 months, you are just 1 year or 2 years or 3 years. It's not a problem, right? The most important thing is for you to have this open mind to know that I find myself in an environment that I didn't know that is going to go this deep, right? And the deeper that it goes, the much more better for you, you know, because if I say, give me £10,000 at the back of this, it's a joke. I can charge that for anybody. But if I do not charge and I find people who are going to make good use of it, and £50,000 or I make 100,000 or I make £1,000,000, and they come back tomorrow and be like, thank you so much for taking my trading to the next level, you know. Sometimes I don't really have time to say that I want to. You can't hear. Can you hear me now? Sorry, I put something.
Yes, we can.
Right. So sometimes I wanted to build a platform, but I'm doing so many things. But the little that I can do consistently every Saturday at the same time as well, the better for me, because I know that at least out there, you are there and you are looking for it. You know, you would have gone through so many places where people would have possibly charged you this or charged you that. If what we are preaching is really genuine and it's true, we don't really have to charge for it. People know how to appreciate what is really right, you know. But the people who can have a thing that will be useful for them are people who you know that they are more than happy to continue to follow. They are not going to lag behind or lag back, because if I hand it over, what you can do with it is unlimited. You get where I'm coming from? But I don't want to hand it over when you don't have the right knowledge that you will be able to build on top of it, you know. So when it comes to trading, it requires understanding, knowledge, you know. That is just one aspect of the profile, the point of control. But the way that I'm using it is using it on a much more secure, bigger level, right? Using it intraday is differently, but that particular one is producing results. You know, it's a produces results that takes a trade from a little £50 to 2,000. It's there live. It's not a thing of whether it's on a demo or whether it's not telling the truth. No, the trades are actually there. I think what I haven't actually done is I haven't shown you the history. Yeah, some blunders that I would have committed. Right. So when you look at it, the results are there. So in some cases, the reds are there. And in some cases, when I'm actually highly disciplined, the reds are really there. I mean, the green pips are really there. And in some cases, and this is what platform like Say Trader will do for you to help you to lock in some profit. And I think in some big cases, I've got some pips. Oh, this is current month. If I say all history, right, the 100 pips day, the 113 pips day. But when this account started, I started it that red, which is good. But it started with what? It started like that, 51, 55, and look how many trades. So it's not like a save. And look how many trades that I'm taking. I'm not taking a killer trade on it. Maximum that I put on that for one particular reason or the other, 0.1 lot, but aside with smaller lots, right? And then 71, 80, 100. Only God knows how many trades that I took to take me to £100. That's when I first of all double it. Then it started growing 100, 180, 200, you know, 300, 382. I didn't even remember that I've done so much crazy thing like this. 500, 600, and that's our 700, 800, 900, and 1,000. So I hit 1,000, come back to 989. Or what? Yeah, and I've withdrawn about £300. So I'm just, when you get your trading to a level, you don't have to deposit anymore. You know, you will just deposit one time and you won't have to deposit anymore. And that is what we need to be achieving, you know. And there are other strategies that we can talk about as well, but maybe we leave that for another day. But yeah, so on this particular one, I've seen a role reversal over here. Look at here, when we have this retest and price is coming back to that point of control, area of role reversal, point of control on the weekly, and the price took off 100 pips, pound Aussie. All right, so let me see whether we can find some trades for the new week. We've looked at the pound dollar. If you remember the pound dollar, and that's how I remember my numbers. The pound dollar, we look at it, I think we're looking at 1.2970 area over the new week. Well, obviously, the analysis is about, have we found a low, right? Such that that low is now showing us that we don't have any more orders at the back of that low and things are going to go up. So you have to remember the monthly analysis and then continue to use the monthly analysis so forth. So look at this now, right? So this is a monthly analysis. We found a high, we found a lower high, more lower high, you know, which is telling us that nothing is really interested in going up on this pair. And now much more lower high somewhere over here, with the exception of this excess. Anyway, this is just a challenge, but things are pressing down conveniently. So let me see what is coming up. Dollar Swiss is dead to the downside, but I'm looking for something on the point of control. Exactly. Look at this one. Come back to test that point of control, Aussie, New Zealand, and then That's when things start to rise up higher. So if we can learn this, if we can follow this, right? I'm not just going to be the only person that will be calling the trades. Yeah, it's still available anytime, Damien, right? Anyone will be able to scan the market and call the trades, and then we'll have so much belief in that person, and then we'll be able to take the trade, you know. So this Euro Aussie, I'm just waiting for it to break above the area where it's challenging, and then obviously off we go. It's not yet ready. I'm looking for something that's a little bit ready. Euro card. This one too. I think I took this one from this low area, Euro card. And then Euro card was a very good one too. You can see that it comes to sit on that monthly point of control, 5.200. But the one key thing is this structure at the same time as well. Let me show you. You won't be able to see properly over here, but this structure is very, very profitable. This rounding bottom. Let's look at it on daily. All right, so here we are. All right, let's go and look at it on. These are the trades that produces results for me and help me to build the account. Eurocard was one of them, and I'll show you what I was saying and why it's important for us to look at things that way at the same time as well. And then you can whip off the market. All right, so this is the monthly. You can see we have this low, the same thing, the same thing, the same thing. So now, for a fact, when I start to take the trade, I was taking it from here. For a fact, I know that the direction is up, right? We've tested it one too many times. And then when we go to the daily now, this is where the logic is. Can you see the way the daily struggles and give us like a cup formation? Right, that rounding bottom type of a setup on the longer time frame, right? It shows us that things have completely find a very good support. We're not going down anymore, and price continue to push up higher. So I think I took profit somewhere at the high on this particular one. But that rounding bottom setup on the longer time frame, the more you employ that longer time frame in your trade, you can benefit, because this is what you want to benefit. A move like this, that you sit in the market and be like a 400 pips and stay counting. A move like that, even that is what you want to benefit. That green days, those are what you want to benefit. But and that's the way that I look at it. So Euro card is another good one. Let's see what's happening on Euro Swiss. Euro Swiss is coming up, and this can definitely now explode because we've traded above the point of control. I know there's conviction. We can come back to test 1.0710. 1.0710. If you want to note that down, let's find the chart. So let's be saying this is what I said, 1.0710. Do it this way. Once you know the area where you want to act, you can set an alarm on that area. You can go about your business. This one has hit it, sitting on it 0.8990. So the next thing that we just need to do on this one is see what it's actually doing. So we found a low, right? And then if price continue to rise back upward, we've tested the high where we find rejection, and we see going to be able to go up higher. But just because we've tested, if we haven't tested and we just go in there, then it would have been good. So now what we want to go and do is a second retest, and that second retest has got all this madness, about 300 and something pips, but we won't negate the fact that yeah, Euro Aussie. Let me give you Euro Aussie again. All right, so Euro Aussie, what we are actually waiting for on Euro Aussie is 1 point. Right, get in touch with me when we finish. Then I will see how best I can help in that. 1.6550 is what we are waiting for to break, and we go ahead of it. 1.6610. Pound is a 980. Okay, that was the one that we were looking at. Well, for Euro pound, struggling at the moment. I don't really like much of the setup, but I'll tell you what I like. So look at this one, low, low. Well, we've missed it. Just not a problem. There's so many pairs. Right. This one, low, higher, low, higher, low, higher, low, higher, low. What do you think about this one? Euro New Zealand. Euro New Zealand, any little sell-off in this now, it's a good opportunity to buy. I'm not sure whether we can come and retest back 1.7740 anymore. But where we are exactly right about now, if we manage, 1.7861. Let's actually look at Euro New Zealand. I like the conviction at the back of it. I don't know. I hope what I'm trying to say, I don't know whether it's making sense or not. If I'm talking too much and there's not any understanding at the back of it, don't hesitate to recall me back. It's not about bragging, it's about getting us to have an understanding. 1.7740. Thank you. 1.7. So I want to see a lot of people doing great thing. I want us to be able to put fear. There's still another thing that will show us going forward. I want us to be able to put fear on the side and just conquer the market, I want to see positive vibration all over the place. All right, so 1.7740. And then obviously the conviction is there. You can even see when we saw this rejection at the high, what do? They still come back in to come and push things strongly higher as well. So, and this is one thing I realized about some candles, that some candles can be very, very deceiving, because look at this candle. After this sell-off, right? Everybody's doing what? Everybody's looking at this. A lot of people have even plotted this. This is a supply zone. Of course, it is a supply zone. It's good to know all those things. But we were closing above what? The key level, 1.7740. That's where we were closing above, which is key. And then this is now looking like a save. I like this trend. And this is another thing that I want to discuss. Low, we form a high, we form a what? you form a higher low and price shoots up to this area, right? In this area now, are we just going to say that the trend has changed? No, we still have a higher low, but we can still have another higher low, right? Which is probably what we are having over here for one reason or the other. Eventually, yeah, don't get me wrong, I'm not saying that we can't break the level, but for now, we've traded above it, we've retested it, and up we go. You know, so there's a couple of teachings that's involved. So now this is what I'll be looking at for this. So I look at it for other opportunities as well. So I'll be saying to myself, what kind of pattern am I seeing on this now, on this 4-hour chart? So this will be becoming very interesting. And my 4-hour chart can now be a guidance for me to say, okay, chart is so funny. So this trend is there. Let's see where if I come down this low or something. So what exactly would I be doing with this now? I've kind of entrapped the price inside there for me to still understand and get the right areas to act on this. And then now I want to play a structural play, and this is a question for someone that asked me that question. So sometimes when that area, you can see now we have our level over here, right? Now we have the 4-hour lining up like this, okay? And then obviously now we know that in this area there's some kind of resistance, which is still fine. The other thing that I want to point out to you is note when the price is up here, we are above the median line. All right, we are above the median line, which is telling us that this guy is still very strong. But suddenly now we've break below the median line, right? So that is telling us that okay, we shifted in a way, but it's not a problem. So what do I do with this information now? These are the things I'm going to do. This is all I need on the 4-hour chart. What I know is if price find a reason to come and break here, and it won't just go down immediately, it will want a reason to break here, right? So the moment we have a reason to break here now is the only time that I'm going to be saying, let me be a seller, right? So I've already zeroed down in my mind that, okay, as we're going up, if we have a reason to break this, that is a key structural break, right? Don't hesitate to even say it like that. That's a key structural break. But that key structural break is going to end up somewhere here that can then immediately do what? Because it's a monthly location, continue to push things back higher. All right, we think about it like that. If we break down like this now, okay, then now this our monthly area now becomes an area whereby we can start to look for what? A selling off. All right, so that one is noted. But what is the key development now? I'll go to 1-hour charts. So on my 1-hour chart now, I want to do the same thing. I want to look at this and say to myself, the last structure that I see over here will be this guy coming down like this, okay? And then I have that particular structure. So when this gentleman was coming down like that, when we break out of here now, we started seeing this, okay? So we've broken out. I know that the trend is up. The next key thing for me is to now find a reason to put a sense at the back of it, right? So just because we've seen the high and we know we are in a key supply zone, I will now gradually say to myself, maybe in that supply zone, we might have a failure, okay? So I will move to a 15-minute chart. and say to myself, in case we're gonna have a failure, where can we have this failure? This is my 15-minute chart, and that's all right. So at the back of this 15-minute chart now, the structure is telling me this is what we are following, and then not only following that, I can still extrapolate and say to myself, so you can see how we descend gradually from 4 hour, right? A big picture on 4 hour to 15 minutes. I can say extrapolate that and say that, okay, price can come and eat this top of the structure, because each and every time we touch the touch of the structure is sell off. We can still find a reason to come and eat here now, and then find a reason to continue to go down. So until this 15-minute chart find any reason to break, right, then most probably I'm not going to be thinking of selling this guy for now, right? So the key thing is, but yeah, that's on the shorter time scale. But thinking about it again, the big shots, which is the best shot, would have been if this 15-minute chart comes to hit this, right? And this is going to be good. The reason why this is going to be good is, remember, this is a 4-hour structure. This is a 4-hour structure. That's how you now build your hierarchy of trade, slimming things down on the on the smaller time frame. So this is a 4-hour structure, and if price go ahead to hit this area, that's our best possible shot. The reason why it's our best possible shot is we are following this structure based on a 4-hour time frame. Fast, we can have this. We're following this structure based on a 4-hour time frame. And each and every time that we are eating, bounce down, eat, bounce down, eat, bounce down, and then we're eating, and then most probably now in area of mass psychology where we have a previous resistance like this area now, yeah, area of mass psychology where everybody wants to short the resistance. This another whipsaw area. This is what you have to put into consideration. Just because this is the way the 4-hour channel is coming, it is now glaring to us that we cannot just have that short in this area alone. We can go ahead and break that area, hit that 4-hour resistance zone, right? Which means we would have broke above the area of mass psychology, all that resistance, and everybody is putting their watts, they are putting their risk at the back of the resistance, and everybody will be saying, now it's a stop hunt, right? It's a stop on 40 something pips over there, and this can come and hit this trend line. Price can hit this trend line because it's an area of mass psychology. Everyone is putting their stop there. But the way the orders is coming up is what everybody has forgotten. Everybody has forgotten that this trend is coming up so strong, right? And then it can be using the structure as a guidance. And when you are using the structure as a guidance, price is going to structurally find a reason to break through resistance and come and hit this structure that is using as a guidance to do what? To now eventually sell off, right? In most cases. So that's the reason why most times we break above a resistance, right? And when we break above a resistance, a lot of stops is definitely above a resistance, but the price has been following a different structure over here to come towards this high compared to this structure that is following. When price came here, this is the structure that we were following. So we were going up like this. we're going up like that. And we know that we're going to be hitting an area of resistance for one reason or the other. What will time you into it will be this. So this allocation, what will now time you into it is a patience. So actually see that, oh, we come down, we go up, we come down, we make this low, we make this high. At the end of that structure, we come down almost towards that area, right? And then this is the structure that we are following, although we get to a resistance point now, okay? In so many cases, if care is not taken, a lot of traders are taking their trades in this area. But until the structure breaks, right, significantly, the downward move did not start. So if you're taking a sell-off because of resistance, it gets here, price move back up and take you out, right? So understand structure in a way as well. So this is a smaller structure, right, of the 15 minutes time frame now, inside that 1 hour. Smaller structure, price came in, start to form this structure, low, high, right? In all this place, you don't really want to be selling, or else you are selling this. You don't really want to be selling, or else you are selling the highs over there. If you sell this high, it comes back to the bottom of the structure. Okay, maybe I'll take profit because of the way the candle looks like. Price push back up to the high. If you sell this high, it comes back to the low part of this structure. Okay, it looks like as if we break the structure, maybe I'm making something much more sensible. All right, but look at here. This is a key challenge. Once the structure is broken, as usual, that doesn't still mean that your trade will now materialize positively, does it? The structure is broken, we break that structure, we come back to retest it, right? And then we start using that area as area of resistance. So the breakout, which is here, it's what we need to see, okay? And then when we see that breakout, which is on that candle, then we can then say confidently our stop is above here. So timing is very, very important. No problems. Yeah, no problems. Okay, so the breakout of that is very important as much as the breakout over here as well. Right, that breakout. Once those breakouts occur, then your timing becomes right, okay? And then that's the way to channel the energy. Good. In terms of structure and understanding what we need to do. All right. So we break down, see the breakout occur in that region that we've chosen, then another what. So this is what you add together. Right? You know your structure, and this is the reason why I'm saying the TEE, it is not just about understanding one thing, it's about tying it together. All right, so in that structure breakout, now we put another structure at the back of it, break of that area. Now we know that it's time to go. We wouldn't want this, right? So let's be active, not just being active alone. Let us understand how we deal with it, how we take it, how we trade it, so that we're not just going to be trading it anyhow, that will now be giving us a lot of headache, and then we're going to be losing money just because we can't put the thought process together, right? And that's the reason why I said it's all about the thought process. How do we put it together? So I know one thing does not mean that I know it all, right? So I know one thing is one thing. I know then that's about 320 something pips. These are the trades that we want, right? These are what we wanted to catch. This is what we are looking for. So over the last few weeks, I've done about 7,000 pips. Let's see. That's what I catch. On about 7,453 pips, and that is 23rd, that's about 2 weeks, isn't it? 23rd to this 1 week, yeah. So over the last 2 weeks, I've done about 7,453 pips divided by 2. So on the average of 3,700 pips, maybe or so. All right. And you can do it too. And that is the confidence I wanted to give you. That is the edge that I wanted to give you. You can do it. I mean, I'm not special than you, but the key thing is this in trading. Let me be real and honest with you. But the mere fact that you are very good in one particular profession, right, and you are a student or whatever in one particular profession, that doesn't mean that you'll be good in trading, right? The people who are actually good in trading, who eventually becomes good in trading, are people who have faced so many life challenges and difficulties, so many disappointments about their life, right? Because if you face so many disappointments, so many challenges, so many difficulties, so many failures, so many losing trades, any different kind of challenges, you would have overcome fear. And I believe that's the reason why I've got someone like Aluku Chibuike. I don't know how long you've been trading. Aluku Chibuike, Austin, Bolanle Saipad, Damien. I know for a fact that Damien has been in the space for some time. Emmanuel, I know Emmanuel has been there for some time. iPhone, Jalil, Nick as well, Olajide as well, Robert Atia, Rosie A. Shike has been there for some time. Been following me for quite a long time now. Victoria, Idiake, and Winnie. I know that is the reason why you are still here today. And if you haven't faced all those challenges, if you are not strong enough to know that nothing can face you, and win you, then you won't win at this, So for the mere fact that you are a man or a woman, a lot of people give up easily, If I've given up, I won't be here since 2006. And just because I don't want James, thank you. Just because I don't want you to give up or feel like as if there is no opportunity at the back of this or you can't make this, that's why I will find a way to translate what can be sensible. I don't want us to be thinking everybody can have 10,000 pound or $10,000 deposits, even or 5,000 pound or 5,000. Maybe that's still reasonable, but how about people who can have up to that? Can we really make something for them at the same time as well? The world is not about just because I'm on this status. I always try to look down and look deep into, and I think because I'm in Africa and I'm trying to see how best I can help developing nations to see what is really practical, what is really sensible, what can we really do in a place whereby the opportunities are limited, for people who really want to learn. So that kind of inspiration definitely comes to me. And I thought to myself, okay, if I can grow 50 pounds in Africa, and internet alone cost me about £60 a month for me to get this scrappy internet that I'm using. But if I can grow 50 pounds in Africa to that kind of a level, I believe the possibilities is now endless for anyone. You shouldn't find a reason to say now is the time that you want to stop just because of these little challenges that we haven't been able to tie together in the right thought process. But yeah, I will continue to work and put things together in a perspective, in a manner whereby we'll be able to uplift ourselves. We'll be able to get the trading to the next level, because that's what everybody needs, you know, in terms of risk. And that confidence is very, very important. But if you haven't, like I said, go through some life challenges and for you to know that, okay, I have to be strong, then you won't be able to continue. But if you have, and failure doesn't face you, then obviously you will eventually excel. I don't care if it takes 1 year, if it takes 2 years, 3 years, 4 years, 5 years, 6 years, or how long it takes, right? You will be able to put it together because you are following someone who has managed to not just put it together, but is even willing to share, you know, to be a guide along the way and let you know that it's not just because you are very good in one thing that will make you succeed, but there's so many factors that comes together that makes you a successful trader. At the same time, like I said, a 10-year-old or 11-year-old or 12-year-old or 13 or 14 years old might be very good in trading. So trading has got nothing to do with because I am old and I know that I have to invest or I have investing sense. But trading is all about that psychological side of it that you can manage to entrap, you know. So in trading, you will find yourself in a position whereby you have your brain will be working against you, right? And what do I mean by that? There are two types of you, right? Your logical you and your lesser version you, right? Your lesser version you is the one that makes you drink Coke all the time, and you know that it's got so much sugar, and then definitely, most probably, it can affect you health-wise. Your logical you will say you shouldn't drink it because it can affect you health-wise. Your smaller you, which is illogical, will be like, okay, it's sweet, and I'm craving for something very sweet. I can't help it. But your logical you can always help it. So your logical you will be the one that will make you sit down and let's say, okay, I learned something new today. Let me put it to practice. You know, how do I make use of this? No problems. How do I get the best out of this? How do I make sure that I can get it to work for me as well? You know, so how do I make sure that my analysis is there? You know, your illogical you, which is your smaller you, we just want you to jump into the trade without doing what is necessary or what is right. You know, so you have to always understand what space are you. Am I doing what is right, what is necessary? Am I putting in the little bit of effort that I need to put in to make sure that I get it right? Or I'm just looking at the way that the fear and the greed is just going on the chart and I say, oh, it's going up, let me buy. Now that it's going up is the time that I want to buy. And then you buy in that area and then the results end up being this and you suffer staying in it for a very long time. And this result did not just become this, it becomes this because this result has happened. This structure has been broken. You get where I'm coming from? So this result that we're seeing over here that keeps going down is a result that has triggered from somewhere, from doing the due diligence, we know when it has triggered. So that due diligence is what we've done over here now. 1 second. That due diligence is what we've done over here now, and we know that, okay, as a matter of fact, rather than me thinking that this is going to sell off on Euro New Zealand, right? I need to see certain things lining up together, price getting to this area, and if we encounter a sell-off in this area, I'm not still going to think that this sell-off will just carry on going all the way down. It will go all the way down, most probably to this level, right? And when it gets to this level, it can get to this level and turn back up again and reverse back up because we are above the what? The monthly point of control. So we can see a sell-off here. We can see a sell-off here, which is above resistance. And then you are thinking, oh, okay, so it's going to come onto the resistance and find a support and then continue to go up. But that is not the structure. The structure has already shown us that each and every time that we hit the high of this area, we considerably see a significant sell-off. And that sell-off might end up coming down to here. Right, so when we get to here now, we're taking a little bit of a profit. When we're taking profit, we're thinking if this thing now decides to crack here, it's a good crack, but it's not such of a good crack until this price decides to crack over here and goes back up and then start to sell back down. All right. So different stages, right? So different stages of understandings need to come into play. The reason why we have here is because of it's a monthly point of control, and we know that a monthly point of control, things can happen. Price comes above it, now it's respecting to push up higher, respecting to push up higher, comes closer to it, bounce back off it to push up higher. So let's keep that in mind. I hope I've been able to touch your trading in some areas today in terms of the summary is in terms of how do I get this whipsaw? You know, this is a good tool for you to understand why you get the whipsaw. You know, if you're not doing it, you have to put it into practice. If you don't still know how to put it into practice, please don't hesitate to get in touch with me. Just get in touch with me. I will find a reason to put you through. If you know how to do it, then it's good. You know, so don't hesitate to get into. You're welcome, Rosie. It's important understanding structure. I've taught it before as well, but you know sometimes you teach one thing, it doesn't sink in. You have to reteach it and reteach it each and every day. The message will touch someone that it will make a difference in their trading. Or the message is not for everybody. In some days we are going through so many things all the times. You know, you may hear one thing now and you won't be able to put it into practice, you won't be able to put it into use. The message is not for you. That it needs to be repeated over and over again. Then you need to start practicing it, and then once you start practicing it and you start to see the results little by little, then you start to gain the confidence, and then you start to do the unthinkable. You know, but the key thing is being present. That's what kills everything. Just because you are here today, he does something as well. Just because you are here last week, he does something as well. And I've been very lazy to upload the videos lately, but I will do a lot of uploading definitely today. So ladies and gentlemen, I want to say thank you. Thank you so much for taking your time to be out here today. Thank you so much for witnessing this at the same time as well. And obviously, I'm not just doing this so that your trading doesn't improve. It's not going through. Then I need to know. You have to send me your number in a way so that I can do it. You know, so that I can be the one to get in touch with you. I think there's a what's it called spam stopping system on my what's it called that is stopping it. Yeah, but if you send me your number here now, then I will pause you straightforward. Just send your number, no problems. Bolanle, um, anytime. That's my namesake. Is Bolanle a girl or a boy? Is he a man or a woman? Is he a lady or a gent? Oh, female. All right. So this is the unisex. It's a unisex name, basically. Anyway. And where are you from? Nigeria. Interesting. Okay, nice to meet you. I've been seeing you following me for quite some time now. And yeah, so thank you for being part of this. Damian, Bolanle, Austin, Emmanuel, iPhone, James. I don't know. Are you on any of our group? If you join any of the group, let me send you a link to the group. Then I can and just say hi to me over there. Then it will be easier for me to. Uh, it will be easier for me to hear from you, and then I can GF. No problems anytime. Damien, you know how it is. Right? So if you join this smaller group, it's about 50 people or so, or 40 something people, and then send me a message from there. Then that is a Telegram link. You can join that one too. No problems, and send me a message from there. If you have any question whatsoever, I mean, hey, right. So join that group, and then obviously let's interact. Right, no problems. All right, so I'm going to be calling in today, and then I hope it all makes sense and add up. I will upload so many videos on YouTube about the previous classes that we've had. Just go through them, you'll be able to learn a lot. No problems, no problems, no problems. What I need you to do, first of all, is to learn the intricacies, right, of market profile itself, because, and trust me, the thing is this, let me be honest with you on that one. It might take you, if you are very good at learning, maybe it take you about 6 to 7 months to be an ardent practitioner of the market profile, because it is not um, it is not a technical indicator. It is not an indicator. There's more to it than that. But if you know, it can take you 2 years, okay? And that's why I don't really talk much about it, because it takes time. It can take you 2 years, but obviously it won't take you 2 years with a guidance of someone that knows about it, to be honest, if you are just willing and ready to learn like that. It won't take you 2 years with such a guidance. But notwithstanding, that is what it is. Let's carry on learning, and then I'm very sure very soon, not quite long ago, I'll be seeing the kind of result that I want from you guys. Wumi, how are you doing? I hope you and the kids are okay. I hope you're having a lovely weekend. Bookie has run away. Anyway, Nick, how is the whole of Canada too? I hope everything is going good with you lot. And I will be calling it a day today. Thank you once again, everyone, for being part of this call. And I hope you have a blessed week at the same time as well. Thanks. Welcome.